Let's break down a huge market rally where, well, nothing was quite as it seemed. Picture this, November 12th, 2025. A record US government shutdown finally comes to an end. And that news, it sparked a massive wave of optimism. We call this a risk-on mood. Basically, investors were feeling brave, chasing bigger risks for potentially bigger rewards. Right away in the US, the Dow Jones shot up, gaining more than 1%. And over in London, the FTSE 100 did the same, actually hitting a brand new record high. You could see that optimism was just contagious. It pushed major markets in Europe and the US way up. So you see broad strength across the board here, but with one pretty big exception. This is where the story really gets weird. We've got a classic paradox on our hands. Yeah, even as stocks were soaring, gold, the classic safe bet, also hit its highest price in weeks. And what's going on in the tech? In the middle of this huge rally, why did the Nasdaq drop? The answer, it turns out, has nothing to do with the shutdown. It's about some other news. A new report showed US private employers actually cut thousands of jobs per week in October. And that weak jobs data, it kicked off a clear chain reaction in what the market expected next. Traders immediately upped their bets that the Fed would cut interest rates to like a 65% chance. And that speculation got a huge boost when a Fed official hinted an aggressive cut was on the table. So, see, the rate cut talk boosted gold, but a massive stock sale by SoftBank spooked tech investors. And all these US events created their own unique ripple effects all over the world. Now, with everyone betting on a US rate cut, the dollar started to get weaker. So, the euro got stronger against both the dollar and the pound. It was all about expectations. So what's the big takeaway? A market isn't driven by one story, but lots of connected forces. What looks like simple good news can hide some real economic worries. So what are investors watching now?